In a tweet, Edward Snowden, an American author and former computer intelligence expert, said that the price of Tesla stock is still too high. He wrote this in reaction to Elon Musk's tweet, in which he asked people to help him decide if he should sell some shares. It looks like more than just Snowden thinks this. Tesla's market value recently went over $1 trillion, but New Constructs, an independent investment study firm, thinks the company is worth about $1 trillion more than it is worth. David Traynor, the CEO of the company, says that Tesla shares could drop as much as 88%, or about $150 each. Is the price of Tesla's stock really too high? Does it look like there will be a fall? Look at the video again to learn more. In January 2020, Tesla Incorporated was worth $117 billion on the stock market. By the end of the year, that amount had grown to $658.39 billion. The market value of Tesla's stock then surpassed $1 trillion in less than a year, hitting that point on October 25, 2021. In a short time, Tesla's stock has gone through the roof. Investors are confused. It also brings up an important question. Will the same things that helped Tesla reach a $1 trillion value during the pandemic also help the company keep going after the pandemic is over? Tesla's meteoric rise has been helped by individual investors and Elon Musk's tweets. However, there is a Tesla financial complex at the heart of the electric car company's meteoric rise. The Financial Times says that this group of investment tools includes options, stock-linked funds, and climate tech-focused investment vehicles. These have a big effect on the share and derivatives markets. As Tesla's market power grows, the stock and other parts of this complex benefit from each other. Funds and derivatives that have exposure to the stock make huge profits, which brings in more buyers and makes the company stronger. In July 2018, Tesla had a stake in 106 exchange-traded funds, ETFs. By December 2021, it had 244 ETFs. With a 1.6% weighting, Tesla's entry in the S&P 500 index in December 2020 has made funds that follow the index more exposed to the company's shares. They've benefited from the stock's price rise. The business joined the S&P 500. It was worth 2.5% of the index at the beginning of November 2021, and has helped the index earn about a quarter of its value. In November, Tesla made up 4% of the Russell 1000's total weight. The same thing happened as with the S&P 500 principles. Take a back seat when you have too much, and Tesla has been the same way. In December 2021, the company's market value was about 5 times that of its competitors, even though it only made a small percentage of the cars that Ford Motor Company and General Motors Company did. A big part of Tesla's value and related financial goods comes from the idea that electric cars will rule the future. There is no such world right now, making the price of Tesla seem crazy right now. The financial monster that has been Tesla's wild viral ride in the markets has boosted the company's value, but it has also helped strengthen the company's core values. A lot of people put money into Tesla's stock and linked financial products, which help the company's investments in manufacturing facilities. Bonds, which need to be paid back regularly, aren't as important for the company to make money as its shares are. Last year, Tesla sold $10 billion worth of new stock at prices that were about 9 times what they are now. Because of this influx of cash, the company can now open more plants in Austin and Berlin, which will join the ones in Fremont and Shanghai once they're fully operational. The company should be able to improve the number of packages it makes. Tesla just recently reported adjusted earnings of $2.54 per share, which is 218% more than the previous quarter and the 4th quarter in a row of double-digit growth for the company. Sales went up by 65% to $17.7 billion, which was more than the $17.1 billion that experts had predicted. Also, even though supply chain problems are still happening, the company that makes electric vehicles expects a big rise in output in 2022. Tesla stock, on the other hand, went down after the company said it would not be releasing any new electric cars this year. Most people are looking forward to seeing the Cybertruck. Tesla, on the other hand, plans to focus on making more of the models they already have at both their current and future plants. For now, Tesla has the great problem of not having enough cars to meet demand. Key to fixing these problems are the start of production in Austin, Texas, and Berlin. Analysts believe that Tesla's plant in Germany will eventually make most of the cars that are sold in Europe. The Model I crossover SUV will be the first car that is made there. Over the next 10 years, Tesla has greatly improved its ability to make things. Musk wants to make 20 million electric cars. This is more than twice as much as what other huge automakers make right now. Because of this, it is trying to greatly improve its production capacity. When Tesla starts making cars in Germany, it will be up against three well-known German automakers: Volkswagen Group, G. Boma, BMW, and Daimler AG's Mercedes-Benz business. If there is a difference between the price of a company's stock and the price of its stock, the stock can be expensive even if the company isn't doing well. That doesn't work well together. A company might be great as long as its stock price is low. That works well together. But what about a company whose stock price is high and which is almost certainly great? In this case, Tesla is the company in question. As investors, you can either hate or love them. Both fans and opponents are adamant about what they think. This doesn't have a lot of depth. A lot of people know that Elon Musk says the price of the company's stock is too high. Even though he warned about it, Tesla's price keeps going up. But Musk seems to be sounding the alarm now, saying that both Tesla's stock and the stock market as a whole have hit their peak. Tesla's stock price has gone from about $60 a share in January 2019 to over $1,000 a share now. This means that someone who bought $1,000 worth of Tesla stock has seen their money grow 16 times, over to $16,000, even though the stock seems to be going down. The S&P 500, which is made up of 500 of the biggest publicly traded U.S. companies, has recovered 90% over the same 3 years. In the last 3 years, this means Tesla has done more than 17 times better than the market. People who bet that Tesla's stock price would fall by shorting the company's shares have lost tens of billions of dollars because of the company's rapid rise. Even though Tesla's stock price has gone through the roof, many people think the Austin, Texas-based company that makes electric cars is just getting started. The most well-known of these Tesla supporters is Cathie Wood, CEO of ARK Invest. ARK Invest says that Tesla wants the price of each share to reach $3,000 by 2025. ARK says that Tesla's stock price will rise 3 times in the next 3 years if his statement comes true. In 2019, that $1,000 put into Tesla stock will be worth $50,000 in 2025. Tesla is already worth an amazing $1 trillion, and now it will be worth $3 trillion. Toyota, on the other hand, is worth $300 billion and is the second most expensive automaker in the world. There are, however, signs that Elon Musk, the CEO, is not one of them, at least for now. Musk has said many times that Tesla's stock price is too high, but the maker's shares have kept going up, and Musk seems to be okay with this. Musk is unhappy with Tesla's stock price right now, but it has less to do with how well the electric car company he started is doing and more to do with the stock market and economy as a whole. Investors are hopeful that Tesla will be the leader in making electric cars in a clean future. They also think that other companies might end up using Tesla's software design as a standard, and there's nothing worse about this story now. The bulls still think this way. To put it another way, Tesla's optimistic view of 2035 hasn't changed much since late 2019, but Tesla shares have gone through the roof, rising over 1,500% in just a few years. It's been 16 bags in just 3 years. They have grown by 2, twice, and 3 times. Oh, and just for fun, they've turned double. It's hard to see how the stock's future could be anything like its recent past without this ending badly, even if a lot of good things happen. There are a lot of things that need to go just right, and I don't think Tesla can control many of them. What do you think about how much Tesla stock costs? Leave a comment below.